Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. I wanted to share with you guys a very important fractal that looks exactly like what we saw in last summer's sell-off. This is a time where a lot of people are fearful. A lot of people have already started calling for the bear market to be starting, which I honestly think is just completely false. A lot of these people are just being overly emotional, and this is something that's perfectly on par with what we've seen in prior cycles. Today, I wanted to give you guys an all-around analysis inside the Bitcoin price chart so that we could all come together and draw the same conclusion on why I believe that this sell-off is simply at the bottom and why this entire dip is going to get bought up and bring new all-time highs for a lot of profit potential moving forward from here. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any new videos like the one provided for you here. And make sure you guys check out the Discord server and sign up. It's free, not going to cost you anything. Links are provided for you in the description if you guys want to join my community. On top of that, if you're a new guy getting into these markets and you want to make sure that you're making better decisions, maybe you got wrecked inside of this sell-off and you were wondering why you actually did so, links are provided for you in the description to go ahead and download my free ebook and beginner's guide to trading crypto. This thing's going to help you guys out a lot because I made a lot of the same mistakes you guys are, and I know that a lot of the information I put in this ebook for free is some of the most vital information that helped me. So go ahead, check it out. Links are provided for you in the description. And with all that being said, guys, let's jump right into this amazing video today. Alrighty guys, so here we are for today's video. I wanted to share with you guys a simple pattern that I am noticing between the Bitcoin chart that reminds me so much of a prior cycle that we had in the last summer. It's honestly insane how the time frames of these two cycles happening are almost at the exact same pace. And I think that this video is going to help you guys to understand exactly, where do our time frames stack up for this cycle? Where are we going to be closing out the end of the year? How is this cycle going to be a little bit different from the last one? And so I wanted to actually cover a couple things. I want to talk about the Elliott wave count inside of the big picture cycle for us to all understand exactly where we are in the grand scheme of things. And we're going to go through and I'm going to share with you guys a pattern that I think is something that we should all be paying attention for because it's really showing, pretty much the same structure as what we saw last summer right before the massive run. So first things first, guys, let's talk about what we're seeing here on the shorter time frames. Let's drop it to a daily time frame. And I want to share with you guys the exact setup that I'm actually wanting to explain to you. So first things first, guys, this entire move that we're seeing here, you could call it a head and shoulder top. You can call it whatever the heck you want. This is your classic ABC correction based off of Elliott wave theory. There's a number of different types of ways that you can call this correction. One of the things that reminds me so much alike is actually what we saw last summer. So if you guys recall, let's go all the way back down in here. This was a very important level for Bitcoin. So as you guys remember, this was the March panic that we saw back in March of 2020. And from that point, we saw our rise. Now, if you guys recall, it was back at this point where we had this massive, massive resistance level. And it was this level here that was pretty much our line in the sand. If we couldn't make it above, then we were bearish. If we make it above, then that was pretty much our historic level that once flipped, we all knew it was going to be bullish in the grand picture of the trend. So if you guys recall, we had this massive resistance level at about 10K approximately. This was a pretty strong level that even takes us all the way back here inside of the bear market. And so as you guys can see, about 10K approximately, it was our resistance over here, it was resistance here, short-term support inside of this relief bounce at 14K, and then it became a very strong level of resistance. We rejected off it here, 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 and then if you guys recall, what we did was we actually flipped this in that summer. We had our correction of that happened, early summer, or actually it would have been late summer because at the peak at August. And so it peaked in August and we had this same pullback, right? And if we come in here to the shorter time frames, I think you guys are going to start to understand that these are actually very similar in market structure. We see almost the exact same type of pattern. Keep in mind, this was a very strong level. This was that 10K level that once we flipped, it pretty much just cemented the bull rally. And that's when we went into our massive rally all the way upwards of 60K. So if you guys remember, we had one massive sell-off right after we broke this level. And it looks very much the same as what we saw here. We kind of formed this rising wedge type structure where we make these peaks. We're trying to break up higher. We're uptrending. But then prices end up selling off. And we get the same type of corrective structure, this A, B, and C, right? Everybody watches the trend get sold off. Everybody got really bearish at this point, right on support, and then prices ended up rebounding and going up much higher from here. And it's actually very much the same type of price action that we're actually seeing today. And if I come over here and actually take this, I'm going to go and draw it over this chart, and we're going to go take a look at kind of the similarities that we're seeing here today amongst this cycle right now. So if we come over here, let's actually try and fit this together a little bit, and let's see if we can come away with roughly the same type of market structure. So it's actually pretty insane how much these two are actually lining up to be the same type of consolidation here. We get roughly the same type of peaks. We can see that we're uptrending throughout this period of time. Same way that we saw, we can see that we're uptrending throughout here, right? Same peaks. We can't break above. We end up selling off, and then we get the same ABC correction, right? ABC. It looks almost the exact same as what we saw all the way back down in here. And if you guys remember, we had this massive level inside of the bear market. This was a strong resistance level where once we flipped this is when, Jack Dorsey announced that he was buying a bunch more Bitcoin. A bunch more institutions came out and bought Bitcoin right here. And that was really their confirmation. It was once we flipped this level, everybody pretty much knew that Bitcoin was about to be breaking all-time highs. And that's exactly what it did. And so it's interesting to me how we're seeing almost the exact same type of consolidation here. It looks almost the exact same. The only difference is this one is happening on a much bigger picture. We had a much bigger impulse that we're coming off of. And so I really think it's going to play out roughly in the same way from here. And so this is what I think we could be in store for. And I mean, based off of this, if we continue to follow the same cycle, we could be at about a couple months of consolidation. In fact, I think it's likely, guys. It's very likely that we will see somewhat of a consolidation. I mean, you don't normally see a market, have a massive sell-off of 50, 60%, and then it just immediately start bouncing and breaking to all-time highs. Yes, it does happen, but more often than not, you're going to see a period of consolidation. My guess, we will see the same thing happen for Bitcoin. We will see some ranging. My guess is Bitcoin's going to rally back up to about, 47, 48K approximately. We'll most likely get a short-term rejection from there, and then we'll just kind of consolidate sideways for a little while. My guess is about 2 to 3 months. That's going to be the corrective phase that we will expect to watch out for from here. And what will follow, guys, is a very big impulse. I think that we're going to be headed well above and beyond 100K after this move. And we're going to see, a lot of altcoins really continue to outperform. And based off of the Elliott wave theory, if we actually come over here and drop it to a weekly time frame, let's talk about realistically what we're seeing right now. So this is honestly what I think is going to be playing out from here. And if we come over here, let's take a look at what we see with the Elliott waves. So in my opinion, what we see with Elliott wave theory, we got our one wave impulse already. That was 14K, right? The beginning of the bull market, we rallied up to 14K, back down to 3.8. This is our one wave. And so in our three wave, we would expect to see 3 impulse waves. So in my opinion, that's what we saw right here. This rally from 3.8 upwards of 12. And once we flipped this 10K level here indicated by this green line, this was our one wave. So this is 1 of 3. We get another 3 impulse. You could call it 1, 2, 3, 4, 5. This would have been our wave 3 of 3. And then we get our final wave 5 of 3. And then that's what brings us to the cycle top at 64. So in my opinion, wave 1 was completed at 14K. Wave 3 was completed at 64K. This was the 4-wave pullback. And what we're going to get ready for is our final 5-wave impulse of the cycle. That's the way it lines up, I think. We topped out here at about April of 2021, whereas in the last cycle, we topped out at about June. So we're a couple months behind in this cycle. We might be front running this one just a little bit. And so what that tells me is we should continue to expect to see a lot more upside from here. Because keep in mind, guys, that the 5-wave is the biggest impulse based off of a parabolic cycle. And we can see that, right here. So if we come over here and analyze the Elliott waves are going to look something like this. 1, 2, 3, 4. And then this is our 5-wave. Our 5-wave goes from 3K all the way up to 20K based off of Bitcoin. So wave 1 was just this little one, takes us to the all-time highs. Wave 3 takes us from about $800 upwards of 5K. And then wave 5 is much bigger. We can see that wave 5 is the biggest extension in this cycle. I expect that we're going to see the same thing play out again inside of this cycle. Wave 1 was the smallest. Wave 3 broke us into new all-time highs and into price discovery. Pretty much the same thing happened here. It was in that same wave that we went into price discovery. We got that same summer pullback around the same point in time. Keep in mind, the top of the 3-wave in the last cycle was about the end of August. So isn't that funny how the top of the 3-wave this cycle is about April? So we're a little bit front running this cycle. And so we could expect to see the same thing. Who knows? Maybe we see this 5-wave overextend. Maybe it closes us a much longer, lengthier uptrend where we pretty much do nothing besides go straight up throughout the rest of this year. Kind of like what happened after March of 2020. We could see the same thing play out once again, and so we should be aware of that. But regardless, the point of me talking about all of this is to share with you guys that we've only finished wave 3, and we still have the biggest impulse of all of the cycle, because it was the same way in the last one. The 5-wave was a very impulsive cycle, and I would expect that this one's going to be roughly the same way. I think that this 5-wave is going to overextend. We should see something very similar to what we've seen with prior bubbles in the cycles, where the 5-wave just gets very, very impulsive. We've seen it with gold, we've seen it with silver, we've seen it with a number of these different commodity markets. The 5-wave has been known to extend very high. So I do think we're going to see something similar play out in this cycle once again. And this pullback here is only the top of the 3-wave. And when we actually draw our Fibonacci, it's important to look at the Fibonacci, because our Fibonacci is really how we know if our 4-wave is completed. And what's funny, guys, is what you want to see inside of a 3-wave and a 4-wave retrace is a retest of the 618, which is perfectly where we hit inside of this bear market retrace. Now, and I shouldn't even say bear market, I should just say short-term correction. We went all the way back down and perfectly bounced right off this 618. This is exactly what you want to see based off of Elliott wave theory. It follows Elliott wave theory perfectly, all exact textbook examples right off that 618 Fibonacci, which is what we want to see. And so because we've gotten this bounce, I honestly think that the bottom's in. I don't think that we're going to be consolidating here at these lows. Most likely we end up bouncing upwards of about 47, 48K, and then kind of finishing the same type of consolidation that we saw all the way back down in here of August of 2020. This is roughly the same type of consolidation that we've seen all the way through. You know, we will see some differences because no cycle is always going to be exact, but we should expect to see roughly the same type of consolidation here. It's pretty much the same as what I pinpointed in, you know, some of my earlier analysis back in 2017, where we got a V bottom. So after an impulse, we get a correction, and then we end up just getting an impulse and then going into new all-time highs. And we make this V bottom type structure, right? And that's really what I'm watching out for this consolidation. We're either going to get sideways consolidation kind of like this, and then a breakup, or we're just going to immediately get this dip bought up and then just start going up higher. My guess is we will get a little bit of consolidation sideways. It makes sense. I mean, we've done nothing besides go straight up for the most part since March of 2020. I would expect we'd get a couple months at least of consolidation sideways. It makes sense for a market to consolidate a little bit, but it isn't required. We could see a number of different things play out, but this is kind of what I'm going to be watching out for moving forward from here. I wanted to give you guys this analysis as just a way to kind of map out what I see happening inside the market. I still think we got another impulse still to come, a final 5-wave impulse, where we should see a lot more altcoin dominance taking off. We should see altcoins continue to outperform because it's in the latter part of the cycle in which altcoins normally do that anyways. We've been seeing altcoins outperform anyways, so we should expect to continue to see that. You know, even though we've seen Bitcoin dominance take off just a little bit, we are in a big downtrend, and we will continue to see altcoins outperform. So anyways, guys, this is just a quick update, give you guys an informed analysis on what to expect moving forward from here. If you guys like this video, always remember to leave a like, comment, and subscribe to this channel if you are new. Check out all this awesome content that I have every single day for you guys. On top of that, if you guys do want to join my private Discord, links are provided for you in the description to go ahead and join based off of my website. You guys can actually sign up for my video course, which is going to teach you guys how to trade cryptocurrency using technical analysis. You guys can also join my signals and follow all those trades that I take in this cycle. Links are provided for you in the description. Check out all of those. On top of that, guys, if you're just a new guy getting into these markets and you want to make sure that you're making the best decisions for yourself, this is free and not going to cost you anything. You guys can actually download my free ebook in the description. This is something that's really important that I think is going to help you guys out a lot, which is once again why I made it free to download. Links are provided for you in the description. Go check it out. And with all that being said, guys, I will catch you in the next one. As always, peace out.